Hello there, and it's Clive Lambert from Futures Techs here, and having a look at a few of the charts for some of the more important markets that everybody likes to look at. And first chart today, looking at a daily chart for the S&P 500 futures, which has gone precisely nowhere all week. Basically, we've not done a lot. We topped out on Monday at just above 2800. We got to 2814. Now, if you look on that chart and you look back to December and November and October, so the third quarter of last year, right around here, every time we had three forays above 2800 after the initial sell-off that we saw from the highs in October, and each time it failed around these levels. So are we going to do that again? Well, evidence so far is a little bit mixed on that front. We're not getting any follow through to the downside despite a little bit of upside rejection on Monday. I've got a short-term uptrend line on that chart. That's at 27.68 today, and below that we've got that green line, which is what everybody seems to want to look at these days, whatever the market, and that's your 200-day moving average, and that's at 27.51. So for me, if we are going to see downside, we are seeing another rejection at on a move through 2800, then we need to confirm this by breaking those two support levels, 27.68 and 27.51. And if we don't, I think we just continue to back the bulls, and that may even end up with a return to the highs. Okay, so that's just a very brief look at that equities. Now, how's that translate across other asset classes? Next chart I'm looking at is gold, and we have a rising channel that gold's been in lately. It's had a really good, it's had a good 6 months, gold, but maybe we've broken out of that channel now, and we're retesting support around 1300 to 1305. And it really needs to hold on to that, otherwise we go back to 1280 and 1250. So yeah, with the channel's broken, and maybe the as people always say with gold, maybe it's losing its shine a little bit. I hate that sort of thing, but gotta throw the bad puns in, haven't you? Okay, another market that I keep a close eye on and have lots of clients looking at is Brent Crude oil and the oil markets, WTI, and been pretty bullish of this for a while now, and so certainly through most of this year so far. And we started this week off with a tweet from Donald Trump to say that that gave us a big sell-off, basically. In Brent Crude, which is the sort of European UK benchmark for oil, we saw weakness at the start of the week back to 64 handle. Now 64.17 was, and that still is, clearly an important technical level. It was resistance. It's now doing a job as support, which says to me that oil is still going up. And that said it to me, on Monday and Tuesday, basically, when we held that area. And then we were able to add an uptrend line to the chart as well. That's at 65.20 today. So for me, still a bullish looking chart. As far as the technicals are concerned, everything's still pointing higher for this one, and we'll soon retest Friday's high at 67.73. And above there, their targets we're looking at are 70.60 and 72.80. And everything's fine in that one still if you're bullish. And finally, if you're looking at fixed income markets, it's been pretty dull lately, really. There's not been too much to get excited about as the market has contracted. Volatility has been very tight. We've got the Bollinger Bands on there, which are often something you can use in those sort of market conditions. And if they get too close together, then that generally says, right, something's going to happen soon. We've seen that in the last few days, or the last week or so, that they're getting tighter. They're telling us that things need to break out, and we saw a move to the downside yesterday. If that now breaks 121.12, we go to 120.00, 120.05, and we can maybe start to see things livening up a bit in the fixed income space. Thank you.